and we will put this on our website. So, so if you're taking notes and you don't quite get it, you can catch it up later. Today we have Gary White and Dan Lovelace with us presenting, and this is Thriving in the Post-Healthcare Reform. I just want to make sure I've got Gary and Dan on there. Gary and Dan, you with me?
Yeah,
yes, I am.
And this is Gary. Yes, I am.
All right, Gary, we are going to switch over to Gary with being the panelist right now. So, Gary, I'm going to give you control here, so hold on a second. All right, Gary, you are now the man, so you just need to get your presentation up there on the screen for us.
All right, just 1 second. This is the hardest part of the presentation, is making all the technology work, so bear with me just 1 second. Well, thank you very much, Mike, and thanks to all of you for dialing in this morning. We promised to do our best between Dan Lovelace and myself to make this not only a very informative, but we hope the result will be some new products, some new ideas, and really some things that we think will be very, very important to all of us in the future as we continue to deal with some of the things coming down our way with healthcare reform and all the facts and fiction and all sorts of information that's floating around out there in the marketplace today. Some or many of you may have heard a presentation that Holly Kramer, my counterpart at Capital Benefits Group, and Dan gave at the summit meeting recently. And some of what we're going to cover today very briefly is kind of an overview of what we're seeing and hearing in the industry today. But I think more importantly, and this is a result of feedback that we received from a number of you following the meeting, is yes, we know and are aware of a lot of the issues and concerns with pending health care reform, Obamacare, if you will, and what's the impact going to be on our business and our industry. And what we really want to do, in addition to talking about that, is not spend all of our time on that, but more importantly talk about what we see are really some very good options and opportunities for all of us in the business to thrive, regardless of what's going to shake loose eventually with all the changes in health care. So again, very briefly, what I'd like to do is just talk about, some of the issues, some of the concerns, some of the things that we're hearing out there. A lot of this may not be new news to you, but these are, as we're out traveling and dealing with our marketing partners, a lot of comments, what's going to happen, truth or fiction, industry rumblings. In our conversations, independent brokers, many are looking to sell and possibly get out of the business. And, as people pass away, if you will, there's not as many new young people coming into this business. Groups with less than 50 lives, there, of course, was an awful lot of conversation about all the health exchanges and how these are going to work and what the impact's going to be on our business. But, at this point, the direction seems to be that groups with less than 50 lives are going to be sending employees to the exchanges, and these exchanges are going to be not only dealing with health insurance, but some of the supplemental benefits as well. Groups are or will be moving to defined contribution plans. Private exchanges will be all the rage. Is that really going to be the case as we move forward here? The role of the navigator, if you will, is going to replace the broker. Depending on what you read and hear, 75% of us feel that, or brokers may feel that they're going to be worse off come 2014 when these changes are scheduled to take place. And, healthcare costs are going to rocket, premiums will jump exponentially, and, we could be looking at, depending on who you believe, $1 trillion spent on all of these changes in healthcare. So again, what we want to cover today, and we'll be very mindful of the time with you, is just kind of a quick healthcare reform overview, some of the what-ifs, what works elsewhere, and really, more importantly, what we see as the opportunities, and what we think could be very important to all of us as we continue to earn a living in this great business. Talk a little bit about what's next and some of the things that we can do to help you. And again, I'm going to cover the first part of this presentation, and then Dan Lovelace, Regional Vice President with Transamerica, will be handling the second part of the program. Our company, for those of you who aren't familiar with Capital Benefits Group, we are an established developer and program manager that provides a single source solution to businesses seeking comprehensive packages of ancillary benefits. And that portfolio includes dental, vision, life, STD, and LTD. Our role, and we've been at this for 15 years, is that we partner with top-rated financially strong insurance companies, and then we work selectively with strategic partners such as Mike and his team to get these programs into the marketplace. And our focus is on the small to mid-sized employer groups, until that, we understand, is an area that many of you focus on as well. And so the plans that we're talking about really are going to, later on in the program, will kind of target those markets, the 2 to 99 life groups, if you will. And as I'm sure you'll find, if you haven't already, in dealing with Mike and his team, these products are very, very easy to quote and sell, and we place a great emphasis on that to make it easy for you folks to present and sell these products. Again, an overview. I don't think, regardless of who is elected here come next week, I think we all would agree reform is here to stay in some form or fashion. We're going to see a lot more, we believe. Guarantee issue with no pre-X. Exchanges are definitely going to play a role in the future. Many still believe that millions are going to continue to go uncovered, and depending on penalties and whether people actually have to purchase coverage, you could almost envision a scenario where people would just buy insurance once they know they have a major illness or need to get to a hospital or a doctor. So there's still an awful lot of uncertainty about how all of this is going to shake loose, and of course the exponential costs that could be associated with some of this, both in terms of increased premiums and certainly increased out-of-pocket expenses to the employees. Right now, the penalties, for not participating seem to be too weak. And again, I think a real key point, and maybe the most important on this slide, is that most consumers are uninformed, and frankly, there's probably never been more confusion in the marketplace today in terms of how all of this is going to work and what the impact is going to be on the consumers. And frankly, we view this as just a huge, huge opportunity for you, the brokers in this business today, in that consumers and employees and employers more and more are going to have to turn to you for the answers, and frankly, we think that's going to present some great opportunities, albeit maybe with a little bit of a different product mix in terms of supplemental and ancillary products today. Again, younger American rates will probably go up if they're going to have to fund some of the benefits for the elderly and that sort of thing. So again, nothing probably new or different from what you folks are hearing day to day with conversations with other brokers and at health underwriter meetings and that sort of thing. But there's going to be more and more of a burden put on groups, employer groups, with notices and reporting. And again, with these health exchanges, obviously the number one focus is a source for medical insurance, and a lot of states are creating their own, and they're looking at private health exchanges as well. But also impacted are going to be dental and vision. Some of the supplemental products are going to be involved here. We already know pediatric dental and vision benefits are going to have to be made available through these exchanges as well. Summary of what's happening elsewhere. We've all heard about what happens when national health care comes into play. I mean, there are many, many countries in Europe, the United Kingdom, Canada, etc. And, some of them are quasi-horror stories, if you will. Health care coverage is at least partially funded through income taxes in many of these countries. Supplemental insurance, the ancillary products, is included at least some level of benefit in these universal programs in various countries. And where the huge market opportunities seem to have gravitated, where there is national health care, again, is on supplemental coverages, the ancillary plans, ancillary benefits that we're going to talk about here in just a few minutes. And Of course, long waits and reduced coverage for expensive procedures are a reoccurring theme in these countries with national health care, and maybe even more concerning is anything you read today will tell you that we're already anticipating a major doctor shortage in the country, in the U.S. So these are going to be major issues and challenges as we move forward. But very briefly, these numbers at the bottom of the screen, these just show in the UK as an example today with national health care there, if you will, employers continue to play a major role in benefits. 72% offer private medical insurance, 46% LTD, 24% provide dental, etc. So again, regardless of how it all shakes out, the employers are going to be playing a major role. Today's market, 10 years ago, employees expected benefits and were really not engaged in their true value of what these programs really amount to for them. And now, as employees struggle to make ends meet and plans for cutbacks, Social Security, Medicare, etc. are out there, we're continuing to see more and more high deductible health plans, which means employees are losing access to a lot of first dollar benefits, if you will. I mean, there's no such thing without utilizing some of the ancillary and supplemental products that are out there today, and Dan's going to talk a little more about that later. And again, employers still continue to recognize with much certainty that they need to continue to provide benefits to attract quality employees to the organizations. So our belief, and the belief of many others, is that benefits are going to continue to play a critical role in the employer-employee marketplace. What ifs, and I'm not going to read through all of this in the essence of time here, but we have some obvious scenarios where if our current president continues after next week, things are going to keep moving along the path for implementing Obamacare. There almost certainly will continue to be challenges legally for that, and who knows if the 2014 target year is actually going to be met, but I think almost all of us would agree that there definitely will continue to be changes, and many of these benefits will be implemented, or many of the planned changes. If Romney's elected, again, it's kind of a coin toss right now. He's vowing to disband, if you will, Obamacare, but whether or not that's really going to happen, and again, depending on whether it's a Republican majority Senate or Democratic, we may see a whole lot of deadlock continuing into the near future. So all of this to say there still will continue to be a lot of uncertainty as this all unfolds, regardless of who's elected next week. Facts that we do know: in the future, employees are going to have to pay more of the cost of the benefits. Employee loyalty is linked to satisfaction with their benefits, and by offering non-medical and voluntary benefits, and of course we've all seen a big movement in that direction in recent years, and we think that these voluntary benefits are going to continue to be hugely important in the employee-employer marketplace. And recent numbers we've seen, nearly half the employers who don't offer voluntary benefits expect to do so in the next 2 years, and maybe most importantly of all, the majority of the employees continue to want to see more choice and more options to fill the gaps that they're experiencing in their medical plans. The broker's role, your role as we see it, and our role as a plan manager in working with you, is going to be continuing. Your role is going to be vital with the employers to help them see through the maze, balance rising business costs, help the employers establish, the value proposition. If medical changes, what's the impact going to be, and how much out of pocket can the employees really afford more when, the great majority of the Americans today, or a huge percentage, are living paycheck to paycheck. So something's got to give, and they're going to be looking to the broker, you, all of us as consultants, to help them really work through all of this and determine the best directions to go. Problems and solutions, and again, this is kind of leading us immediately into the products, but high deductible medical plans are definitely, that's a reality. And so Dan's going to talk a little bit about some of the gap and supplemental insurance plans that can help fill the voids that many employees are experiencing today. 40% of Americans are not saving for retirement. huge role for cash value life insurance. Many people do not have disability. Dan's going to touch on that as well. And on the employee side, employees are going to be seeing more and more the types of plans where if they sign up for them with one employer, they're going to be portable. And so it's going to be important that these voluntary and supplemental products have portability features with them as well, and you're going to see that in some of the products that we're going to talk about. Again, nearly half employers are planning on adding voluntary benefits in the next 2 years. Some of the plans we're going to touch on briefly today are these types of products that we believe are going to continue to be in high demand regardless of what all shakes out with Obamacare, and it includes dental, vision, accident, critical illness, cancer, disability income, and of course life insurance, both cash value, level term, and gap coverages, which are becoming a huge important product in the marketplace today. Self-funded medical, you're going to see more, a lot of business go on to the self-funded side. Non-insurance programs are going to play a key role, whether it's, these teledoc type programs. I mean, we even, although this would be insurance, pet insurance, more and more programs are being added to the employee benefit packages that are out there. Technology will continue to play a huge role, and we may find that a number of brokers are going to be, depending on how things shake out with compensation and commissions, consulting may well be something that becomes a more formal process for many brokers out there in the market today. And lastly, I'm sure we'll continue to see opportunities to partner with other experts where brokers are maybe working with retirement planners, financial planners, etc., to really help fill in these gaps that we're seeing in the marketplace. So enough about the scene setting and some of the drama maybe that's coming down the path with Obamacare, but what we wanted to touch on today are what we feel are some very viable solutions available to you today, and will be based on the carrier partners that we work with in terms of the commitment to the marketplace in the future. And I just want to touch on some of the packages that we at Capital Benefits Group provide to INA and its all of its brokers. Dental plans, we offer a portfolio of group dental products targeting that small to mid-size employer marketplace. Our plans are underwritten by Transamerica. We can do employer-paid plans from 2 to 99 lives, voluntary 5 to 99, and then custom quotes for groups of 100 or more with experience. Also available through CBG, vision plans. Again, top quality partners. We're working with United Healthcare. We have a voluntary vision program that's been hugely successful in the market. It's available for as few as 2 lives up to 2,000 enrolled lives. We have life insurance, STD, and LTD available through Lincoln Financial Group. We'll go down to 5 lives for employer-paid plans, 10 to 99 lives on the voluntary side, and then the products Dan's going to touch on in more detail through Transamerica, CI, Accident Life, STD, and GAP, voluntary products that are available for groups of 2 to 2,000 lives. Dental, as many of you well know, because more and more brokers are selling dental insurance today, is the second most requested benefit, or the most requested benefit after major medical insurance today. And so I think the key message here is that if you haven't really dipped into the water with dental insurance, again, through your partnership here with INA, you've got a great opportunity to let them help you get into the dental business, because it's no secret, if you're not talking about dental insurance with your clients, definitely someone else is. It's just hugely important in the employer marketplace today. Again, our plans, high participation for 2 to 4 lives, 100% participation after legitimate waivers, 5 to 99 lives. We need minimum 75 participation after legitimate waivers. These would qualify, if you will, as our employer-paid plans. We really don't require the employer to pay anything. We just need to hit these participation, high participation limits here, and of course they get more favorable rates than you'd see on the voluntary side. Voluntary plans, again, 5 to 99 enrolled lives. We just need 15% or 5 enrolled lives, whichever is greater. And then, of course, for 100 plus, we need these groups would all be experience rated. Dental options. I think the key here is talk to your reps with Mike and his team. You'll find that we have incredible flexibility built into our group dental programs so that you literally can custom design a plan to meet just about anything you're going to see in the marketplace today. Annual maximums from $1,000 to $2,000, variable deductibles. You can move endo, perio, and oral surgery from major to basic. We have both child and adult ortho. You can adjust usual and customary from 80 to 90%, and all of our plans include a maximum rollover benefit. So again, top quality dental programs with lots of flexibility to help you meet whatever you're going to need for your employer group clients. PPO network, we use a combination of Dentamax and Carrington, some 60,000 providers with 174,000 access points, so significant national coverage. I might add that with our dental plans, they are available in all states except New York and New Jersey. Usual and customary, I know we hear this term bandied around a lot. Various companies use various definitions of what that means, but in our case, we only use the NGINX data. It's updated every 6 months, and what this really means to you is fewer claim issues, less headaches, less problems for the end user, and that we're using the most up-to-date data available through NGINX to make sure that our UNC levels are where they need to be to keep everyone happy who's participating in our programs. Voluntary vision, we're seeing an awful lot of success with our voluntary vision plans, and if you're not offering this today, we have available probably one of the easiest plans you could deal with in the marketplace, and I would encourage you on any of your quotes that go out to your employer groups, even if they've not asked for it, I would highly recommend you just throw it out there. We only need a minimum of 2 employees. It's underwritten by United Healthcare. We have a Spectera network that's significant, 30,000 plus providers, very easy to quote, very easy to sell, and no employer participation is required. And there's one set of rates for any size group, so very, very easy to work with. And again, talk to your reps with Mike and his team, and they'll get you all the information you want on that. And then last, one of the last slides here, but how will healthcare reform impact dental and vision? You know, in our conversations with many of our MGA partners, the question keeps coming up, well, how will dental and vision be impacted by these health exchanges and health reform? I touched on that briefly earlier, and essentially, at this point, we know that pediatric dental and vision is going to have to be included, but there's still an awful lot of uncertainty as to what the maximums, the limits will be with that, and so that's still an evolving story, if you will, but there's no question that the exchanges will include some form or fashion of dental and vision, so supplemental products will definitely be impacted by what eventually shakes out of the exchanges. Life, STD, and LTD, and again, I won't read through all of this, but mainly want to make sure you are aware that all of these products are available, our dental, vision, life, LTD, STD. They can all be presented in one single proposal for you. So it's a single proposal, multiple products, 3 top-rated insurance carriers, and then on the back end, there's single billing for all of these plans. So we have both employer-paid, voluntary plans underwritten by LFG, Lincoln Financial Group, and some fairly significant guaranteed issue limits on the employer side, employer paid up to $180,000 of guaranteed issue coverage, and on the voluntary side up to $160,000 of guaranteed issue coverage. So again, certainly would encourage you to ask the questions and just get some sample proposals to see how these rates would look for your employer groups. Extending group coverage beyond medical, this is just a snapshot today of how many employers are offering these different plans in the marketplace today. And this is some LIMRA data that's actually a couple of years old. But as you can see, high demand for these products that we're talking about here and that Dan's going to touch on in just a moment. And with that, I'm going to turn this over to Dan.
Well, thank you, everybody. This has been a lot of information.
Dan, I'm
Go
going to
ahead,
hand
Mike.
this over to you, okay? So hold on here a second.
Okay, you should see my screen up there now. All right, Mike, is it up there now?
I see Critical Assistance Advance.
Yep, that's it. Well, I appreciate everybody for hanging in there. This is a lot of good information. I thank Gary for his detailed explanation of some of the things that we're going to face as we move on with change. And regardless, as we've been talking about, regardless of what happens, who's in office, there's going to be change. And this is an excellent opportunity for us to get out there and be advisors. And as advisors, we have solutions and strategies that people are counting on us for. And I can tell you right now that with all these changes, whether it's healthcare exchange situations or it's the group medical, we're going to have cost share that's passed down to the employees. And more than ever, it's crucial that we have some plans that are going to step in and help people with first dollar benefits. Critical Assistance Advance. This is a great program that's going to help families, deal with medical and non-medical, those indirect expenses that they're going to be faced with. Things like still paying for the home mortgage. Those things like car payments, lunch money for the kids. Those things still have to be taken care of when someone's faced with a major illness. A lot of the programs, whether it's an exchange program or the employee major medical plan at their company, they're going to have cost share. They're going to have $2,000 and $4,000 and more, higher, $5,000 out-of-pocket expenses, and we're even seeing those creeping up towards that $10,000 mark. Those are things that are causing bankruptcies, even with people that have health insurance, and they're things that are making it very hard for people to maintain their lifestyle when they're forced with some of these unforeseen illnesses. Employees are surviving critical illnesses more and more today with advances in medical and the preventive care that we're seeing, the post-care that we're seeing in the advances in medical science and medication. People are living a lot longer after critical illnesses, and the need for this is increasing more and more every day. We have coverage for those major critical illnesses such as heart attack, stroke, cancer, end-stage renal disease, major organ transplant, and more on our plan. So those are things that we can help. The other side of offering a good, robust critical assistance or critical illness plan is it's going to help attract, and really more importantly today is to retain those employees that they really want to hold on to by providing a more robust benefit program. A lot of times they've recently increased their deductibles or increased that co-insurance amounts. We're seeing a lot of 30% co-insurance to employees now. A lot of companies have went with self-funded or partially self-funded plans, and having these critical illness programs in place not only help the employees but can help mitigate some of that risk of these more expensive big-ticket items. This provides a way for employers to boost benefits while also supplementing those needs. The convenience of payroll deduction makes it more viable and more realistic as far as having the ease of those premiums be taken out of the paycheck. It makes it more out of sight, out of mind. And our programs are fully portable at the same rates, which makes it a good value for that employee who may be moving on to a different position with another company, retiring, or leaving for any reason. They can take it with them at the same cost. It's also going to provide an avenue for employers to help employees with the financial aspect. So a lot of employees are having to take from their retirement or take huge penalties on their 401ks when they have something unforeseen happen because they have to come up with the money. this has a significant financial impact in the positive when they have these critical illness plans. So our critical illness plan pays a lump sum benefit upon diagnosis of a first ever occurrence of some of those critical illnesses or all of those that I mentioned earlier. What we've done with CBG as a partner with Transamerica is we've put together a very good program that provides ample benefits at a very low cost. So with this program, while it is customizable and we can offer different levels and different limits, what we feel is we've put together a very good template coverage with a couple plans that are not only very affordable, but again, very robust. So we can go down to only 2 lights, provide you the unmatched customer service that you need and that your employees need, as well as covering those things such as heart attack, stroke, critical illnesses like cancers included in our plan. Heart transplant surgery and coronary bypass surgeries have some coverage on here, as well as end-stage renal disease, major organ transplant, and if they have to go in for angioplasty, there's coverage on this plan for that as well, because we want to help people with those significant costs. Some of the benefits here, and you all will have this sheet if you haven't received it already, but we have a standard plan that pays a lump sum, again, upon diagnosis of $10,000, going anywhere from $1.86 per week for an employee to a 65-year-old plus at $21.73 for the whole family, which is a tremendous value for people as they're reaching their older years that have more of a risk than some at the younger years. We can still offer them plans. We have a superior plan at $20,000, and you can see the weekly rate is anywhere from $3.27 to $43. Again, these are payroll deduct, and they're going to help supplement those gaps that they have with those new higher deductible plans. So if someone's going with maybe a plan that has some very high limit max out of pocket, we do have that superior plan. Conversely, they may have a lower out of pocket, but they want to have a buy-up plan to offer some coverage for indirect costs, like time missed off work, those expenses that keep going in the household. They're going to have an option to go either our standard or go with a higher option with our $20,000 superior plan. We're making this really easy for you and some of the brokers that you may be working with to help present an easy solution that fits a lot of different scenarios, yet is very robust. So really quickly, I'm not going to spend a lot of time on the exact coverages. I will say that this plan has coverage for heart attack, stroke, heart transplant at 100%, coronary bypass surgery at 25%, and then we have some coverage for angioplasty and stent procedures at 5% of the face amount. It also covers the ESRD, which is kidney failure, end-stage renal disease, major organ transplant, excluding the heart, because that's covered under Category 1. So it is covered on our plan, however. Paralysis, burns, coma, loss of speech, some of those things, even Alzheimer's disease at 30% of their face amount for the policy. And then we've also included the cancer coverage. So it covers the basic cancer, bone marrow transplant, some other carcinoma in situ, prostate cancer with certain classifications, and even a small skin cancer benefit. We do not have the occupational HIV rider on their coverage. That is available for certain industries that have a direct risk of being in contact with bodily fluids, such as first responders. There's some employer optional riders, such as our reoccurrent critical illness benefit. So that covers 25 to 75% of the face value if they have a reoccurrent critical illness. So if they've had a heart attack and then they have another one. There's a wellness benefit rider from $25 to $100 for wellness benefits. If you would like to include that, we can also put that on. Things like accident emergency treatment, initial hospitalization for accident, intensive care benefits, and quality of life. These are all riders you can choose from. Now, we didn't include those in our template coverages, because a lot of companies have programs, especially now that cover wellness, and then have accident plans to cover some of these other items. However, we can customize for specific situations what you need to cover the most for each individual employer. The next coverage I'd like to talk about is accident coverage. Now, we've seen accident plans out in the work site venue for many years. And for many years, they've been hit and miss as far as how employers viewed them and the significance that they played, for their employees. A lot of times, this has been more of an individual type sale. Well, now more and more, again, with having cost share going up, with groups looking at ways to reduce their utilization on their health plans, with groups raising those first dollar exposures that their employees have, these accident plans are being integrated more and more. And really, even over the last 18 months, I've seen a huge spike in the amount of employers that are seeking quality accident plans. Really, for employees, that line between voluntary and core benefits is really becoming a lot grayer, and they're seeing this as something that they expect in having access to. So we're going to provide a flexible plan design along with these template coverages I'm going to go over to make it easy for you to offer these to your groups. Again, payroll deducts, no physical exams or blood tests are required. These are always guaranteed issue. And the coverage is completely portable at the same rates. Even if the master contract is canceled with the employer, the employees can take this and have it bank drafted from their bank account. We have employee and family coverage available. So what we've done is we've put together two packages. We have our standard plan that's going to offer a good level of benefits, that's going to also provide a low weekly rate for an employee of only $2.31, which is only $10, a little bit over $10 a month. We can do one-parent families, two-parent families, and a family rate of less than $5 a week. That means this plan is well under $20 a month for the whole entire family. We've then put together a superior plan that just has a little higher limits and a little higher indemnity amounts that are paid in case of an accident, and those are between $370 and $782. So we're still very, very reasonable. When you look at these are right around, well, they're far less than on our family plans, far less than 2 hours per week for the whole family, even if they're only making minimum wage. So these are very, very affordable plans and very robust at the same time. Both plans have coverage for accident emergency treatment, follow-up visits, and physical therapy, which all of those things are time-consuming, that makes them lose time off work, and very costly, especially with the new cost share on physical therapies, as well as a robust initial accident hospitalization benefit to help them with those hospital copays. We also have AD&D riders on there. And there's some hospital ICU income riders, expanded benefits for cuts, burns, tears, sprains, breaks, dislocations, and very robust plan. We do have some other riders available I won't spend a lot of time on right now, and those have to do with disability. So if you are looking for a company that wants some disability as opposed to none, we can package that with this accident program. Just some example, accident emergency treatment. On our value plan, we're going to pay them $175 on the value plan to go to their doctor or an urgent care or a hospital if they have an accident. It goes to $275 on our superior. If they have a MRI or a CT scan, $280 on our value, $440 on the superior. For physical therapy or accident follow-ups, we have $80 or $110 per visit. And then we have a very robust initial accident hospital. So if they're hospitalized due to their accident, they're going to be paid a lump sum of $1,050 on the value or $2,100. As you can see, those are going to take care of all or part of their cost share on their major medical plan and provide a huge benefit that's going to help them be able to afford to keep their standard lifestyle when they're dealing with unforeseen events. And again, these rates are extremely low on a monthly or a weekly basis, however you look at it. Health packs, and we're going to go through this quickly. This is a GAP program that helps with inpatient hospitalization up to $10,000. So on some of these higher cost share plans, we actually have the ability to provide a bucket of money to cover things that they would be faced with if they were hospitalized. It'll cover everything that their major medical plan covers in the hospital, aside from drug, alcohol, or nervous mental related. Outpatient surgeries, those are becoming more and more prevalent. We can cover up to $5,000 on outpatient surgery. Radiological diagnostics, we're going to cover up to their outpatient limit for things like MRIs, CAT scans, ultrasounds outside of the hospital up to their outpatient limit, and we'll cover them in the hospital up to their inpatient limit. And we also have coverage for emergency room visits due to accidents. And this is a very robust plan today to help you be able to position higher deductible and co-insurance options for your employers while giving them better, more robust first dollar benefits. We package that with our critical illness and accident plan to cover even a more robust schedule of benefits for them while providing coverage for those gaps that they face on their major medical. So again, we're going to be able to mitigate medical rate increases, provide better benefits, and offer this guaranteed issue down to 2 employees. This is a spreadsheet enrolled product, no signature required. The gap has no pre-existing conditions. So when you're looking at renewals coming up, please look to us to provide you the means to not only mitigate those first dollar costs, but allow you to lower their renewal premiums while providing them better benefits. This is a huge benefit you have. I'm going to speed this up because of our time constraints. You've all been so good at sticking in with us. This is great information. But I want to tell you that we also have whole life insurance, universal life programs, level term products of 5, 10, and 20 years that actually renew until age 100 guaranteed at level renewal periods as well. We also offer basic term life. That's the employer paid basic term products as well. We are mostly competitive when we look at our level term, universal life, and whole life. We can offer those down to 2 enrollments on a group, so it gives you the option to go in and offer simplified issue products all the way down to 2 lives. Our Trend Select product, again, is available for 5, 10, and 20-year level term periods. The premiums are designed to be level as well as far as the term. We do have it in the policy that those are level for the first 5 years. However, we did that to keep the premiums at the lowest point. We do not ever plan on raising those. However, there is a clause in it they could be raised for the whole state after year 5. I point that out because you may see that in some of the literature. We did that to keep our filed rates down. I can explain that more at a later date. But they are designed to be level premium, level term. We offer basic term. But we do recommend that you offer our level term as well. We're not as competitive as maybe some of the other carriers on the basic term employer paid. We can quote those, but we are very, very competitive on our level term, and it looks and it feels like an individual program, but it's on a group platform, therefore they get group rates. We have the ability to add a long-term care rider on not only our level term products, which we're the only one in the industry that can do that, but we also offer a long-term care rider on our UL and whole life platforms. We have very few medical questions and no medical exams or blood work, even when offering the long-term care coverage. Our benefits do not reduce at age 65, and they're very competitively priced. Issue ages, we can go all the way up through age 80 on a 5-year term. 20-year terms, we can go up to age 65. So we do have some broad age ranges that we can cover. Again, they're all level terms, renew at level term at age 100. We have the ability to go down to 2 lives up to $500,000. If you have 10 apps, whether they're voluntary or employer paid, we can offer $25,000 guaranteed issue even on small groups. We can offer up to $125,000 guaranteed issue on larger groups, even with low percentage rate participation. We'll have this chart available for you, and we can help you strategize those issue limits with each group as they come. Some sample rates on our 10-year term, let's look at. $50,000 10-year term at age 35 is only $10.42 a month. 55, $37.17. Even for a 20-year term, our rates are very reasonable. And remember, there's no other underwriting other than a simple one-page application. So we're able to go in, help them, provide them robust benefits that are fully portable. They are convertible. We can add long-term care and critical illness at very low percentage increase. Our permanent life insurance, we're going to be able to add 4 benefits in one as well. So whether it's UL or whole life, we can also add the long-term care, critical illness, along with a cash value component. This is voluntary down to 2 lives. We have some stats here with less than 1% of Americans own long-term care, and we put that in there because our permanent life policies, when bundled with long-term care, make for a tremendous, robust long-term care plan that we can offer down to 2 lives in the workplace, with raising the life premium very minimally, and they can have a very viable long-term care plan with only 2 voluntary applications. So this is a huge benefit we have in the market, not only the UL and the long-term and the whole life plans, but being able to also offer that long-term care benefit. Stay tuned for future trainings on that. We look forward to helping all of you position that within your groups. I've covered all this on this page, and I'm going to, I believe this is when I'm going to turn it back over to Gary. Let me just double check on here. I don't see my slide number, but I believe what I'll do is I'll go ahead and, Gary, I'm going to turn this back over to you. So if you want to bring your page back up, you can go over the trends and take us to the finale here in the last few minutes.
Gary, I've given you control there.
All right, and listen again, this is Gary White, and at this point in the program we're going to end the presentation. I know we've taken up a good bit of your time today, but I think most importantly both Dan and I greatly appreciate the opportunity to share with you what we think could be some great solutions for whatever changes we're going to see coming down the pike here with national health care, regardless of what form or fashion it ends up in its final stages. And we just want you to know that our organizations are committed to making sure we've got quality product options for you, and we are firmly committed to our MGA partners like INA. And so any information that you want or need in terms of getting additional details on these products, obviously continue to work with your INA team. From our viewpoint, you have the absolutely perfect partner for the future with INA to access all of these top quality programs that you're going to need to meet the needs of your clients as we move forward together here. So again, we greatly appreciate your time this morning, and any questions or things that may surface from this, we'll be circling back with Mike and his team and make sure that you get the information you may need to hopefully ideally move forward and start quoting and selling some of these products. So
we do have one question here. Dan, are you still with me?
I'm here, yes.
One person asked here, how does the critical illness and accident compare to an Aflac or a Colonial policy?
Yeah, that's a great question. Our programs are built on a group chassis, which makes it a guaranteed issue product where we do not have to have applications. We can do it on a spreadsheet enrollment. That's a big difference. Secondarily, while they're on a group chassis, they're fully portable at the same rate. A lot of the Colonial and Aflac programs are available on an individual platform, therefore they require individual applications, individual underwriting consideration. And those, while they offer some group plans, they have to have much higher numbers of employees to offer it. We can offer this guaranteed issue down to 2 applications, spreadsheet and roll. Secondly, another big point is our policies are fully customizable in the sense that each level of coverage is flexible on our accident plan. So you can design a plan that is suited to a premium or suited to a benefit structure, whatever best fits that employer, and even make it more relevant to their major medical plan. So more customized, more flexibility to customize, easier enrollment, not to mention the premiums are very competitive against them, and we can usually come in at a lower rate.
All right. I have another question that here has been actually put out there by a couple of different agents that are asking, they're saying that this legislation is very confusing, that they can't seem to get any straight answers. Where can they go to get some straight answers about the Affordable Health Care Act? And some people feel they have the success. If you, when I read this, my assumption is you might not be an agent that works a lot with INA. We have prided ourselves as being top-notch on the forefront of PPACA and have done several webinars on PPACA. If you, now I will tell you, this still is a bouncing ball, and a lot of things are still moving and changing all the time, but we do the best we can to stay right on top of that. I would say, if you're one of those that has that question, give a call in here. Talk to your sales rep. If you don't have one, we'll assign one to you. And we will certainly answer any of your questions that are answerable today, as well as we give a point of direction to some of the webinars that we have put together out there that are very informative. We just recently did one a couple of weeks ago that we had close to 300 agents online sitting in that and got nothing but rave reviews about it. So just contact us, and we'd love to help you. I'd like to thank Dan and Gary for doing this today. We really appreciate it. Without you guys, this stuff doesn't work. I'd also like to tell you that if you contact us today, we are, if you have questions or you want to market this to your clients, we do have a marketing piece that we are offering to you folks that you can send to your employer groups or for trying to pick up new groups. It just is something to kind of get your employers thinking. I think one of the things that shocks you about this is it actually says here that throughout an employee's career, 1 in 3 will become disabled for 3 months or more, 1 in 5 for a year or more, which shocks me. And the last one, 1 in 7 will be disabled for at least 5 years or more. So this piece here is designed to be customized. We can actually make it in HTML. For those of you who'd like to use it as an email piece, just let us know. Lastly, we do have our big trip for top producers that we do every year. This year we just want to let you guys know it's Costa Rica, all-inclusive report at Playa Conchal. It's a Western resort. It's a 5-star facility, all-inclusive. It's amazing. It's beautiful. Through the end of the year, any health, any short-term disability, critical illness, all these products, we're doing double credits for people to get there. And to kind of give you an idea how easy it actually is to get there, if you were to write a health group with us with health insurance, it only takes about 38 lives to get to go, all expenses paid. So with the doubling of all the benefits, it doesn't take a lot to get there, and we still have 3 months yet to go. So I'd love to invite you to come along with us and enjoy the time. So thank you for attending. Here's our phone number. Give us a call if you have questions or if you want this marketing piece. We thank you today. I will leave this up for the next few minutes for those of you trying to write this number down. Thank you once again to everybody.
Yeah.